It's almost 3-1 in favor of declines. This is overall NSE. And Jayakumar is joining us now, Managing Director at Prime Securities. Jake, it's great to have you with us here on the program. Good afternoon. Thanks very much. You know, I know broadly and slightly from a medium to long-term perspective, you are bullish and, you are very constructive on markets. But here and now, after, the non-stop rally that we've had all the way from March, are we set up for a slightly deeper pullback here? Or you think that's unlikely? What's your sense?
I think the market positioning is pretty cautious. If you hear the commentary across the world, you hear commentary even in India, people are kind of almost logically expecting a correction. And that's usually never when the markets are accommodative, right? That they give you a correction when you're expecting it the most kind of thing. The fact is, in the short run, the markets are rich. There is enough and more which has been talked about, India being the manufacturing hub, money walking in here, etc., etc. Given all that, I think there's a fair amount of liquidity inflow that's happening right now. So it would surprise me, in fact, especially given the market positioning, how cautious people are, that there'll be a deep correction. There could be a time-wise correction where the markets may hang around in this range. I've been maintaining that taking out highs could be a bit of a struggle. It could technically take it out, maybe do a little more and then correct. But maybe with 18,000 as a base, a constructive move may still be a quarter away. But individual sectors and sector rotation is happening. And the principal reason for that is the delayed monsoons, in my opinion, which could be, in the short run, presenting India with a problem that it has not seen so much, like the rest of the world, which is inflation. Because through this entire crisis, Ukraine, etc., India managed bilateral trades, India managed bilateral deals where we've been buying oil well below market prices. Therefore, inflation hasn't really hit us. In fact, the government, has been collecting windfall taxes from some of the oil majors. Now, with inflation kind of topping out, I feel to some extent in most parts of the world, there may be one or two more interest rate hikes. But in general, I think inflation may be, at least on this run, coming to a bit of an end. But India has its own peculiar problem, because if there is going to be a disruption in agricultural production as a result of delayed monsoons, it could be in the short run inflationary. So we are in a sense meeting some headwinds which we least expected, because most people had taken monsoons as a given, in terms of being normal, etc. So that could be one worry, which is why banking sector has been broadly underperforming in recent times. We've seen this could be probably a beginning of a massive upcycle for banking profitability, better metrics, lower NPAs with higher PCRs, etc., indicating that banking profitability could be higher than ever before. But this could be a short-run deterrent, which the market's already factoring in as we speak.
Okay, so Jakes, basically you seem to be retaining more or less your constructive view on the markets, and you're expecting things to get better and the indices perhaps to move higher over the next one quarter. Got that point. In the past, you've also been fairly optimistic on the manufacturing theme, a lot of the PLI schemes that we've seen in the recent past. That brings me to the immediate question, right? I mean, this high-profile visit of the Prime Minister in the US, and there's so much talk around technology transfer, defense is in sharp focus, and there's semiconductors. Now, semiconductor, I don't know how we can play that. Not sure if there's any kind of listed linkage, at least right now. But on defense, stocks have been already pricing in a lot of this enthusiasm. Many of them are up 300, 400% in just the last 12 months. So do you still find valuations comfortable, or is it getting a little too hot in the near term?
If I look around, Lockheed Martin goes at close to a 10 lakh crore market cap, $115 billion of market cap for something like a Lockheed Martin, which I view as the epitome of the defense industry in the US. If you see in India, most stocks are quoting at a tenth or even below. And if you think that the thesis is going to be that technology transfer manufacturing is now going to be the way of the future, rather than in the past, things getting handed down from there, or being manufactured there and we only as importers, then I think this thesis on defense could have a much longer way to go, number one. Number two, I do believe that a few mutual funds have had defense-focused NFOs, and those have, in a sense, meant that there's a greater demand for these stocks in the short run. But there are few and far between. As of now, it's a small universe of 6-8 companies, and some ancillaries to this which could be beneficiaries. But other than that, I don't think we've had a defense move for anything more than, let's say, a quarter or maybe 4 quarters at this point in time. But participation has been low, and I think with the government reducing its stake in things like HAL, there's more stock availability for funds and FPIs to get in. I think the defense theme has got a long way to go. We may have a price saturation for now, but I think definitely the theme has not gotten over. Numbers will get better, and individual sectors can be played. So the way I see some of this is look at the largest in the world and see where they are and whether we can, even get to 20-25% of that size, and then you have, as I said, a runway that you can see visibly ahead after that.
All right. Hi, Jakes. Good afternoon. Good hearing your thoughts, Jakes. The new buzzword has been AI, artificial intelligence, and that's promising to be a big disruptor. What's your view on that, and any plays from this space?
Well, I think it's not very clear, even at a global level. The truth is that AI and ML are, have created tools that are extremely high, almost high definition disruptors, if you will. They're eliminating industries. I mean, ChatGPT and the trailer that you've seen is only a small step in that direction. The big thing is going to be the tools that are leased out by folks like OpenAI and Google Brain, and Google DeepMind indicates that these tools will be available for people to better equip themselves for the future. So you have, in essence, very powerful assistants being created for your business. And there are businesses, I would say, like media, businesses like, anything which is done by rote are all going to get completely, taken to the cleaners. And even investments are sort of going to be looked at from an AI/ML perspective. So while the disruption is there globally also, there are very few companies you can actually play. People played NVIDIA because they make more chips, and the greater chip demand would mean that NVIDIA would be a sort of an annuity play for a while. It indicates that people have gone into NVIDIA and made it $1 trillion stock just while they were even hunting for some kind of an AI/ML theme to be played into. In India, I think we'll have to look at a kind of a derivative of that. We, in a very small way, and I don't mean this to be a marketing pitch for Prime at all, but we in Prime have acquired or in the process of finalizing an acquisition, which is in public domain, of an AI/ML driven financial products company, which democratizes investments and decision making in the investment space for individuals, where most of these tools are largely available for people, in the big quant shops of the world, and they're meant for proprietary purposes, not for people at large, not for retail individuals at large, and we've attempted to do that. So in a small way, we've got into this, but I believe it's not necessarily that small, because I think the impact that we're seeing even early in the day in terms of tying up with brokers, etc., indicates that the space could be pretty vibrant in the days to come. So we'll have to evolve ideas that utilize this and we change the way businesses or decisions are taken. And that's the way AI/ML will have to be seen. A lot of businesses, even unknown to them, could just disappear overnight because there's technology. I mean, just a simple statement that, for instance, Sundar Pichai made a few days ago, saying, gone are the days of CT scans or MRIs, because we are going to introduce something which in a non-invasive way, you can see what's going on inside your body. I mean, it might be a very innocuous statement of 35 words, but I think the potency of that is so dramatic that you could actually have, the entire hospital business under threat at some point in time, not maybe tomorrow morning, not maybe day after, but pretty much in the near future. And the good thing about technology is, because it's available to everyone in the world almost at the same time, the adoption of that can be pretty dramatic in time frame. So given that, I think almost any business could come under threat. The medical profession is the latest one that's facing the heat. In the past, they used to talk about data invasion or data privacy and client confidentiality, etc. But the reality is that all these are only buzzwords to hold what is inevitably a machine-dominated world that we are walking into or have walked into.
On that slightly nihilistic kind of note, Jakes, we'll leave it for now. Thank you very much for joining us. But, you are positive, constructive. Some industries get disrupted, others will benefit. And the job of investors is to find, sectors which will do well, as you very well put it. Thank you very much for joining us with that perspective. We'll take a very quick break here. We'll come back and we'll tell you what's happening in dealing rooms. Nimesh will be helping us with that. And after that, we'll have our technical expert, what to buy or sell today for a reverse trade when we come back on Monday. That's coming up.